A basis point is also called a BP, pronounced BIP, and is a way to cut out the confusion when it comes to understanding fluctuations in rates. If you're watching the market news on TV, it's likely that they're referring to basis points when discussing movements in major indices. Let's have a look at how to understand what they're talking about and how much the market really moved. Basis points are often used in accounting and in the financial services field to simplify percentages written in decimal form. Basis points are sometimes used because they don't require the accountant to use the decimal point when speaking about percentages. Small business owners who grasp this concept can talk more easily with their accountant and gain a better understanding of investing. A basis point is a unit of measurement. One basis point is equal to 0.01% or 1/100th of 1%. In other words, 100 basis points are equivalent to 1% or 1 percentage point. Basis points are commonly used to describe differences or changes in interest rates and to show price changes in the stock market or the cost of ETFs and index funds. Another expression often used in these cases is percentage points. Both basis points and percentage points can be helpful terms for people talking about how much a percentage has changed by. As an example, I'll just use some random numbers. The Reserve Bank of Australia lowered the official cash rate from 0.25% to 0.10%. This means that the cash rate decreased by 15 basis points or 0.15 percentage points. For another example, let's say the average mortgage rate fell 25 basis points. Remember, a basis point is worth 0.01%, and now it's at 2%. That means the interest rate was originally 2.25%. Even this difference could mean saving tens of thousands of dollars throughout the lifetime of your loan. Basis points are also convenient to use when explaining smaller changes in percentages. For example, if you had a savings account with an interest rate of 1.20% and it dropped to 1%, it could be easier to say it decreased by 20 basis points rather than 0.2%. To convert basis points to percentage points, you just need to divide the basis points by 100. Alternatively, to change percentage points to basis points, you multiply the percentage points by 100. This table shows some of the examples. 100 basis points are 1%, 150 are 1.5%, and 1,000 basis points are 10%, which would be really good or really bad depending on what side of the 10% you're on. If you want to look at how much a percentage has changed by in terms of basis points or percentage points, then this table has a few examples. Assuming a hypothetical product with a starting interest rate of 3%. If your original 3% goes up by 100 basis points, then it's now 4% and so on. Although this concept is very simple, it can take some time to get yourself used to casually using it in conversation, but practice makes perfect. Just start by quietly converting it in your head each time you see percentages or basis points, and soon enough it'll be second nature.